Welcome back to XRP Economic Radar, the channel where we cut through the hype and track what actually matters in the XRP market, from price narratives to investor psychology and the stories that shape this community. Today's headline is stirring up strong reactions across crypto Twitter and XRP circles. Top analyst says XRP is not hitting $589 in our lifetime. Here's why. If you've been around XRP for any amount of time, you've probably heard that number, $589, repeated like a legend. It gets posted, reposted, and referenced as if it's inevitable. And for some holders, it has become a kind of finish line. But now a well-known analyst is pushing back hard, saying not only is that target unrealistic, but that chasing it could be the exact reason many people miss their best opportunities. And the reason this is blowing up isn't just about the number itself. It's about what that number represents, how people use it, and what happens when a community starts treating a long-shot price target like a plan. The $589 target has become one of the most durable trends in the XRP community, and it just refuses to disappear. Even when the market cools off, even when price action turns sideways, even when the broader crypto cycle shifts, that figure keeps popping up like a rallying cry. People cite it in comment sections, they bring it up in debates, and sometimes they use it to justify never selling a single token. For many, it's not even presented as a prediction anymore. It's presented like a foregone conclusion, like something that's already written into the future. But that's exactly where the tension comes in, because in markets, belief alone doesn't produce price. Liquidity, adoption, market structure, timing, and investor behavior all matter. And when a target becomes a meme, it can start to override what the charts are doing and what the market is signaling. That's the backdrop for why this analyst's comments hit so hard, because he's essentially calling out a cultural narrative inside XRP, and he's saying it could be costing people money. The analyst at the center of this is JD, known online as @JD_757, and he didn't soften his words. In a recent post, JD said flat out that XRP is not hitting $589 in our lifetime. That's not a cautious maybe, and it's not a I doubt it. It's a direct, definitive statement that immediately pulled attention because it challenges one of the most persistent community beliefs. JD's main argument starts with something many XRP holders have seen over the years: those weird price glitches on exchanges where XRP suddenly appears at prices that make no sense, like over $1,000 per coin, or in the most extreme cases, numbers in the millions. Screenshots spread fast when that happens. Some people interpret those glitches as hidden signals, or as proof that some real price exists behind the scenes. But JD's stance is that none of that matters, and none of it should be used as evidence for future price. To him, those glitches are noise, not prophecy. JD specifically called out the idea that exchange glitches validate massive price targets, and he dismissed it in plain language, saying, "Exchange glitches don't count." And that matters because the $589 narrative has often been supported, at least emotionally, by moments like those. When a glitch flashes a huge number, it's easy for someone who already believes in a massive future valuation to treat it like confirmation. The problem is, as JD pointed out, there were no real trades happening at those levels. No one was actually buying and selling XRP for $1,000, let alone $1 million. It was a display error, a data issue, or an exchange-side reporting problem. Markets only acknowledge executed trades, real liquidity, real fills, and real price discovery. Without that, a screenshot is just a screenshot. And JD is basically warning people not to build their financial expectations on moments that have no connection to actual supply and demand. He's arguing that if your long-term strategy depends on glitches being meaningful, then your strategy might not be grounded in reality. Now, whether people agree with JD or not, part of why his comments get attention is because he claims a strong track record in the last cycle. JD has said he timed XRP's previous market cycle and took profit near the top, and he's openly planning to apply the same approach in this cycle. His style is not to anchor to a community number, but to focus on chart signals and timing. In other words, he's not trying to be inspirational, he's trying to be tactical. His message is that people don't get rewarded just for holding through everything. They get rewarded for understanding when the market is offering them an opportunity and then actually taking it. And in crypto, that's one of the hardest things for investors to do, because greed and fear can override discipline fast. JD is positioning himself as someone who wants to trade the cycle, not marry a price target. That's why his statement about $589 isn't just a hot take. It's a warning about the consequences of waiting for a number that may never show up. JD also took a direct shot at crypto influencers and the long-running hype machine around extreme price projections. He warned that influencers have been feeding y'all fairy tales for years, and he tied that to the reality that many investors are still sitting at a loss. That line hit a nerve because it reflects a real frustration in parts of the community. A lot of people bought XRP at higher prices, held through brutal drawdowns, and waited for big promises to play out. During that time, the space filled up with strong claims, bold charts, and confident voices saying the breakout was always soon. JD's argument is that this constant hype can trap investors into holding too long, because they're emotionally invested in a story instead of responding to what the market is actually doing. And in his view, holding out for something like $589 becomes less like patience and more like paralysis, because it stops people from taking profits at realistic levels when the cycle is actually peaking. The heart of JD's message is timing, and he keeps coming back to the idea that timing is what separates winners from losers in a cycle. He has said before that 95% of investors will lose in this cycle, and his reasoning is that most people don't have an exit plan that's based on data. Instead, they have a dream price, and they keep moving the goalposts while the market moves without them. He's basically saying that cycles don't reward the loudest believers, they reward the most disciplined participants. In a fast-moving bull market, there's a window where price runs hot, liquidity pours in, and sentiment turns euphoric. That's usually when influencers get the most confident and the targets get the most extreme. But historically, that's also when risk is rising, and the chance of a sharp reversal increases. JD's approach is to sell into strength based on chart signals, while many others keep holding because they're chasing the viral target. And JD drew a sharp contrast here, saying that the people who followed the charts and got rich instead were the ones who treated the market like a market, not like a mission. That contrast is important because it frames this debate as more than just optimism versus pessimism. It becomes discipline versus emotion. If you're a long-term holder, you might hear JD's statement and feel like he's attacking the community's confidence. But from his perspective, he's trying to protect people from a very common outcome in crypto, where investors watch life-changing gains appear on screen and then disappear because they didn't take profits. He's not saying XRP can't move. He's saying that the obsession with a very specific, extremely high target can cause people to ignore more practical opportunities. His fear is that many will be left holding through the top again, waiting for a number that never arrives. Of course, the XRP community did not respond with one single opinion, and the replies showed exactly how split investors are on this topic. Some people agreed with JD and said it's good to call out unrealistic expectations. Others immediately pushed back. One user asked a more moderate question, basically saying, all right, maybe not $589, but can XRP at least reach $6? That kind of response matters because it shows the range of investor expectations. Not everyone is locked into the most extreme targets. Some people simply want to know what's realistic within a cycle and whether the next run could break prior highs in a meaningful way. JD's post forced that conversation into the open because once someone publicly declares a famous target impossible, the community naturally starts asking where the ceiling might actually be and what assumptions would have to change for XRP to go higher. Then you had people challenging JD on the method itself, not just his conclusion. One commenter pushed back on the whole practice of reading charts, arguing that many chart readers lose money. And that's not a random criticism. It's a common belief in crypto that technical analysis can be inconsistent, especially when narratives, news events, and sudden liquidity shifts can move price aggressively. Critics often say charts can't predict the future, and that too many traders use indicators like a crutch. So when JD positions charts as the key to getting rich, some people naturally respond by saying, wait, aren't most traders losing? That tension is real, because technical analysis is not a guarantee. It's a framework, and frameworks can fail, especially when people misuse them. Still, JD's point is less about perfect prediction and more about having a structured plan instead of a viral number. Some pushback was more personal and focused on JD's tone. A few people suggested the post felt like attention-seeking rather than pure analysis, and that's common whenever someone drops a strong statement that goes against a popular community belief. In crypto culture, big claims attract big engagement, and people are cautious about motives. But even if someone dislikes the tone, the underlying discussion doesn't go away. The market doesn't care about vibes. It cares about buyers and sellers, and it cares about when those buyers and sellers decide to act. That's why, regardless of how people feel about JD, his post still adds value by forcing investors to reflect on their strategy. Are you following a plan, or are you following a legend? Are you preparing for multiple outcomes, or only one outcome? Because when you only prepare for one outcome, you're vulnerable if the market does something else. Another line of criticism that surfaced was about JD's own entry price. One commenter dismissed him by pointing out that he bought XRP around $0.30. The implication there is clear. If you bought low, it's easier to sound confident, and it's easier to tell others to be realistic. And that's a fair emotional reaction from people who bought higher and have been waiting longer to break even. But the price action since those lower entry points also complicates the argument. XRP has risen significantly from those levels at different points, and the question becomes whether someone with a low entry is more likely to take profits earlier, while someone with a higher entry may feel pressured to hold longer just to recover losses. That dynamic is one of the most important psychological forces in crypto markets, and it's one reason why timing and planning matter so much. At the same time, there were commenters trying to provide context and keep the debate broader than just XRP. One person noted that similar extreme claims circulated in the early days of Bitcoin, back when Bitcoin was under $1,000. The point they were making is that crypto has a history of sounding ridiculous before it becomes reality. And yes, it's true that the market has repeatedly surprised people. Things that looked impossible at one stage can look obvious in hindsight after enough adoption, enough liquidity, and enough time. But that doesn't automatically mean every extreme target will happen. The Bitcoin comparison is powerful emotionally, but it doesn't function as proof. Each asset has different supply characteristics, different demand drivers, different market structures, and different catalysts. Still, that comment highlights why the $589 narrative has such staying power. People fear being the person who laughed at a big number, only to see it happen later. One of the most telling responses came from someone who disclosed they bought XRP at $0.20 and intends to hold long-term, arguing that no chart can predict XRP's future. That is the classic long-term conviction view. Ignore the noise, ignore short-term technical signals, and focus on the belief that the asset's role will expand over time. This mindset isn't necessarily irrational. Long-term investing exists for a reason, and in some cases it has outperformed active trading. But it also carries its own risks, especially in highly cyclical, sentiment-driven markets like crypto. The key issue isn't whether charts can predict the future perfectly. They can't. The issue is whether an investor has a risk plan for multiple scenarios, including scenarios where price runs, then crashes, and takes years to recover. Long-term conviction can be powerful, but it can also become an excuse to avoid hard decisions. What you're really seeing in this debate is the clash between two different identities in the XRP community. On one side, you have the disciplined cycle trader mindset that treats rallies as opportunities to scale out and protect gains. On the other side, you have the long-term believer mindset that treats selling as giving up and sees big targets like $589 as the payoff for years of holding through stress. JD's statement poured gasoline on that divide because it wasn't nuanced, it was absolute. And absolute statements create absolute reactions. But there's also a practical takeaway here. If your entire plan depends on a single extreme number, you're exposed. If you only have one exit point, you might miss it. Many investors who got hurt in previous cycles didn't get hurt because the asset failed to rally. They got hurt because they didn't sell when the rally happened, and then they rode the price all the way back down. And to be clear, JD's argument doesn't require you to hate XRP or doubt its potential. It's more about rejecting the idea that exchange glitches and viral community targets should be treated like legitimate price evidence. When XRP flashes at absurd values due to a bug, that doesn't mean institutions are secretly paying that price. It doesn't mean the real value was revealed. It means a system displayed incorrect information and the market did not actually transact there. JD wants people to separate entertainment from execution. Screenshots can go viral, but they don't pay your bills. Realized gains come from real trades at real prices. And in a market as emotional as crypto, the ability to stay grounded can be the difference between walking away with profits or walking away with regrets. So where does this leave the average XRP investor watching all of this unfold? It leaves you with a choice, And it's not about choosing JD's side or choosing the $589 side. It's about choosing whether your strategy is based on evidence and risk management or based on hope and community momentum. You can believe in XRP's long-term role and still plan to take profits during a cycle. You can believe the market is undervaluing something and still recognize that parabolic targets can distract you from achievable outcomes. JD's harsh line may not be comforting, but it forces a useful question. If XRP never hits $589, would you still be satisfied with your plan? If the answer is no, then the plan might be the problem, not the price. And if XRP does have a major run, will you be ready to act? Or will you freeze because the number on your screen isn't the one you were promised? The bigger story here is that crypto communities often rally around a number because it simplifies the future into something easy to repeat. 589 becomes a slogan. But markets are not slogans. Markets are messy, they're cyclical, and they're driven by changing conditions. JD is betting that the people who do best are the ones who treat this cycle like a cycle, use the charts as a decision tool, and take profits before the crowd realizes the party is ending. Meanwhile, a large part of the community still believes that XRP can hit $589, and they're not letting go of that dream. And that's exactly why this headline is so powerful, because it captures a psychological battle happening in real time. The battle between what people want to be true and what they think the market will actually deliver. That's the update for today, and the conversation is clearly not slowing down. Whether you think JD is being realistic or overly dismissive, his message is now part of the XRP narrative, and it's forcing people to examine what they're holding for and why. Keep your eyes on how these community targets influence behavior, because sentiment can move markets, but it can also trap investors when everyone starts repeating the same expectation. Thanks for watching XRP Economic Radar. If you want more news and updates like this, subscribe to XRP Economic Radar, like and share this video, and drop a comment with your take on the $589 target and what you think is realistic for XRP in this cycle.